Hey everyone, welcome back to Corporate Decoder, the place where we sniff out the juicy bits in corporate filings that nobody else wants to touch. Today we're diving into a filing from Enterprise Financial Services Corp, and let me tell you, it's got a little bit of everything from loans gone sideways to what the future might hold. So, what's the big news with Enterprise Financial Services Corp, or EFSC, as they're known in the stock market? Well, the main event here is an update on some specific loans and what the company expects to happen. Think of it as a corporate status report shedding light on some important details that investors need to know. And if you like getting these kinds of direct insights, make sure you're subscribed and hit that notification bell. We also have our Discord community going, linked in the description below, where you can chat with us and other finance fans. Let's get right into it. EFSC is giving us an update on some loans that one of their banks, Enterprise Bank and Trust, made. They're re-talking about 7 commercial real estate loans. Now these loans add up to a pretty significant amount, around $68.4 million. These loans were made to special purpose entities, which are basically shell companies set up for a specific deal, and these entities are linked to 2 broader commercial banking relationships. The key here is that these special purpose entities share some common owners. These loans were originally a big deal, but they became what the company calls non-performing assets. That's just a fancy way of saying the borrowers stopped paying. The situation got even more complicated because there was a business dispute between the owners. This dispute was so bad that all 7 of these borrowing entities ended up filing for bankruptcy back in the first quarter of 2025, which was earlier this year. A bankruptcy filing is a serious thing. It means the company can't pay its debts and needs legal protection. Now, here is where EFSC is giving us some positive news, or at least news that suggests they're going to get their money back. In August of 2025, the bank started foreclosure proceedings on the properties that were used as collateral for these loans. Collateral is basically an asset that a borrower pledges to a lender to secure a loan. In this case, it is the real estate itself. Since the bank has a senior secured first lien position, that means they are first in line to get paid if the property is sold. This senior position is really important because it significantly increases the chance of recovering the full amount owed. Because of this strong collateral position, the company expects to collect the full balance of these loans. This is a big relief because when loans go bad, especially large ones, it can really hurt a bank's financial health. It means the bank might lose money, which can make it harder to lend to other customers or even impact its stock price. So, the fact that they anticipate collecting the full amount means this issue, while creating a lot of legal and administrative headaches, is not expected to result in a financial loss for Enterprise Financial Services Corp. Now, let's touch on what EFC is registered to do. They have their common stock trading under the ticker EFC on the Nasdaq Global Select Market. That's the company's ownership shares. And when you buy one, you own a tiny piece of the whole business. They also have depository shares which represent an interest in their preferred stock, and these trade under the ticker EFCCP. On the same exchange, preferred stock is like a special type of stock that often pays a fixed dividend, and it ranks higher than common stock when it comes to getting paid. The company itself is incorporated in Delaware, which is a common state for businesses to set up in due to its favorable corporate laws. Their main operations are out of St. Louis, Missouri, and importantly, they are not considered an emerging growth company. This means they have to follow all the regular reporting rules without any of the extended transition periods that newer, smaller companies might get for adopting new accounting standards. This usually means they are more established and have to be more transparent in their financial reporting. This section is essentially the heart of the filing, where they're providing information to make sure everyone has the same important details. This is often done to correct any potential misunderstandings or to provide clarity on specific events. In this case, they are clarifying investor questions about a previous filing by a peer bank. It highlights the interconnectedness of the banking world. What happens to one institution can raise questions for others. Now, a standard but very important part of any filing like this is the forward-looking statements section. This is where the company tells you that they're going to talk about the future, but they're also warning you that the future is uncertain. They use words like believe, expect, and anticipate to describe their hopes and plans. But then they list a whole bunch of things that could go wrong. Think of it as a legally required disclaimer. They're saying, hey, we're optimistic, but here are all the reasons why things might not turn out exactly as we hope. This list of potential problems is quite extensive. They mention economic conditions, interest rate changes, competition, regulatory burdens, and even natural disasters and geopolitical events like the war in Israel and the war in Ukraine. These are all factors that can significantly impact a financial company's performance. The sheer length of this list shows how complex and unpredictable the business environment can be, especially for banks. It's a reminder that past performance is never a guarantee of future results. They are essentially covering themselves by acknowledging all the risks associated with their optimistic outlook. This part is usually more about the technical filing itself. They list the exhibits that are included with this report. In this case, the most notable exhibit is number 104, which is the cover page of this report itself, formatted in a special way called inline XBRL. This format makes it easier for machines to read and process the information, which is important for regulators and data providers. And at the very end, we have the signatures. This is where the responsible officers of the company officially sign off on the report, attesting to its accuracy to the best of their knowledge. Troy R. Dumlau, who is the Executive Vice President and Chief Accounting Officer, has signed here. This signifies that the company is formally submitting this information to the Securities and Exchange Commission, or SEC. Now, let's put on our Warren Buffett hat and look at what this all means. The situation with those 7 non-performing loans, while concerning, appears to be managed. The fact that they expect to recover the full amount is a huge positive. It means their loan officers and their risk management team, despite the hiccups, are set to avoid a significant loss. This is crucial for a bank. Banks thrive on trust and stability, and successfully navigating a potentially bad loan situation without a financial hit is a testament to their underlying strength. However, they are also very upfront about the general risks out there. The broad list of potential problems from economic downturns to geopolitical instability isn't just boilerplate. These are real threats that can impact any financial institution. For Enterprise Financial Services Corp., their strategy likely involves diversifying their loan portfolio and maintaining strong capital reserves. The mention of acquisitions suggests they are also looking to grow through buying other businesses, which, while potentially lucrative, also comes with integration risks and challenges. Overall, Enterprise Financial Services Corp. Seems to be navigating a challenging financial landscape with a degree of success. The resolution of the loan issue is a positive sign, but the company, like all financial institutions, remains susceptible to broader economic and global risks. Their ability to adapt to changing market conditions, manage credit risk effectively, and integrate any future acquisitions will be key to their continued success. Alright, that's our breakdown of Enterprise Financial Services Corp. Latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they're well positioned to handle the risks they've highlighted? Drop your thoughts in the comments below if this analysis was valuable to you. Hitting that like button really helps us out and shows us you want more deep dives like this. And please subscribe for more corporate insights. Don't forget to check out the Discord link in the description to join the conversation. Thanks for watching and well, see you next time on Corporate Decoder.